Hello and welcome to Business Lunch. I am Sonal Bhutra, and before we talk about markets, it's now time for the CNBC TV18 year-end market quiz. Mangalam Malu is standing by with the third answer and fourth question. Mangalam.
Well, yet another hour, yet another question, yet another shot at that exciting prize. This is CNBC TV18's year-ender market quiz. You win prizes on the hour. Before we move on to the next question, here's the answer to the previous question. The question was, which company does not share the registered office pin code area in Delhi with the others? If your answer was Havells, Interglobe Aviation or Nestle, you would have been wrong, because the right answer is Dabur. Dabur is incorporated in Kaushambi, which is quite a distance away from these three companies' registered offices. If you got the right answer, you got a shot to win the prize. If you didn't, you have another chance. Fret not. So here is the next question for the CNBC TV18 year-ender market quiz. Which of these companies was incorporated more than 10 years ago? Which of these companies was incorporated more than 10 years ago? A. Adani Transmission, B. Bandhan Bank, C. Crompton Greaves Consumer, or D. L&T Finance Holdings. These are your four options. This is your question. What do you have to do? Go ahead, answer if you know the answer on our Twitter page. Post it as a comment on the question tweet at CNBC TV18 News. Use the hashtag CNBC TV18 Market Quiz. Do not forget that. Now hurry, give us your answers and win a chance, or get a chance to win exciting prizes.
All right, Mangalam, thank you so much for bringing in that Christmas cheer. That is all about Christmas. But first up, let me take you through the top headlines this hour. Vaccine hopes, US stimulus boost and weekly expiry pressures lead to a many splendored rally. Financials rise faster than the rest. Vedanta jumps after the promoters buy 4.98% stake in the company at 160 rupees per share, while the decision by Lafarge Holcim to retain its fee at 1% sparks an up move in ACC and Ambuja Cement. The Bharti Airtel stock gains after the telco adds the most subscribers at 3.7 million in October, while the Vodafone Idea stock slips after the company loses customers. The 100% FDI not for DTH companies also helps Bharti. Bajaj Auto bats for the PLI scheme, says it could benefit twice as much from it versus the earlier export incentives. Tata Power, on the other hand, sees a bright future for the sector if the government's initiatives to make discoms more accountable are implemented. The stock of Mrs. Bector's Food lists at more than twice the offer price of Rs 288, suggesting unsatiated demand after the IPO was subscribed nearly 200 times. All right, those were the top headlines, and the market's doing well. They have recovered from the lows, but a lot of stocks that are moving around, and it's Vedanta that is topping the list. It has surged as promoters purchased 4.98% stake in the company via open market purchases. Nimesh joins in with all the details. Hi Nimesh, good afternoon.
Hi, good afternoon. So for second day running, Vedanta is buzzing in trade, up another 7-8% in today's trade as well. So in the morning, they've closed the deal to buy 5% stake from qualified investors at an average price of 160 rupees. So the book was launched last evening to purchase that 18.42 crore shares. So 19 crore shares was a large block which got executed today morning. With this, the promoter holding goes up from 50% to 55%. Remember, Vedanta failed to delist the company, and now the promoters have raised the stake by another 5%. So next big trigger for Vedanta will be how much of dividend is getting distributed to the minority shareholders, because they're sitting on cash and they have cash from Hindustan Zinc as well. So now that the promoters have raised the stake, of course they get a higher share of the dividend, and hence the expectation is that the dividend will be much higher going forward, and that's going to be the next big trigger to watch out. But in today's block deal, the promoters have raised 5% by buying out the qualified investors, qualified institutional investors at an average price of 150 rupees per share. 160 rupees per share, sorry.
Okay, Nimesh, thank you so much for joining us with those details. The stock is at a fresh 52-week high. But moving on to the big story, sources suggest that India has in fact filed an appeal in Singapore on 21st of December challenging Vodafone Arbitration Award. Timsi Jaipuria is picking up these details. She joins us with more on that. Timsi, over to you.
Well, as you rightly said, India has challenged the arbitration award that it had received against Vodafone. And this appeal has been filed in Singapore High Court on 21st of December. This was the appeal has been filed on the basis of the fact that India has a sovereign right to tax, and no one can deny this tax. However, whether there is a liability from the Vodafone side to pay or not can be discussed, is what the plea says. So let's see how India wants to take this ahead, because this will also have a bearing on the ongoing Kane retrospective tax case, because that is also another award that India lost yesterday itself. And both the cases are linked. India's appeal in Vodafone case is actually a line of movement when it comes to the Kane tax issue as well. However, tax experts feel that India should have left this case as it is and should not have appealed against Vodafone in Singapore against the arbitration award. So let's see how this case moves ahead in the court. But as of now, yes, India has decided to challenge an appeal, and India has filed the appeal.
Absolutely, Timsy. Retrospective tax has been a matter of debate for the longest time, as you pointed out. Meanwhile, Mukesh Aghi, CEO and President USI SPF, in the light of Kane Energy verdict, has responded to Kane Energy's arbitration ruling. He says, and I quote, "It is time for India to put an end to these retrospective cases that have long been a matter of concern for investors. Doing so will go a long way in rebuilding investor confidence and will also showcase the government's intent to play by international rules. Undoubtedly giving a big boost to investment sentiment," unquote. All right, high freight rates and steel prices and shortage of containers are some of the issues plaguing Motown, but Bajaj Auto is accelerating ahead, announcing a new manufacturing facility at Chakan. Rajiv Bajaj, MD Bajaj Auto, joined us earlier today and spoke about how business is going on for them. Listen in.
There has been a demand peak, as is the case every year around the festive time and just preceding it due to wholesales. And, everybody knows that demand has fallen off very sharply after that. Retails post mid-November and into December have at best been at the same level as last year, which is not great news, because you know that last year we were already degrowing in the domestic market as an industry. In December last year, we did a total of 335,000 units roughly between domestic and exports, so all put together. I think we will be a little ahead of that this December. On the domestic front, with motorcycles, we would be basically, I think, on par with last year. So in terms of volume or share, I don't see significant growth. The last financial year, the three things that had hit the industry very hard and had together really pushed costs up, as you know, were related to insurance, the ABS norms, and BS6. But then we had three new surprises coming our way this year. First, there was this, lockdown, especially the manufacturing lockdown, which I will continue to believe was unnecessary. Then there was, the hit of the MEIS withdrawal in retrospect overnight, which hits a company like Bajaj Auto very hard. What I have seen of it when it was in the making, it seems that it would be very beneficial to a company like Bajaj Auto, and it could be that while with the MEIS, we had an export benefit of 2% on exports. This could be almost effectively between PLI stroke ROCTEP, it could be almost double of that.
All right, Bajaj Auto stock doing really well in trade up at its 52-week high levels. But we take a short break now. Up next, Lafarge Holcim's decision to retain its fee at 1% sparks an up move in ACC and Ambuja Cement. That and more when we return. Stay tuned.